So you want to donate to charity through your business. Let's talk about how that works. First and foremost, it's important to understand that charitable contributions are cash payments made to a qualifying nonprofit, a 501c3 organization. As an example, things like GoFundMe or other fundraising sites are not charity, and those payments are never business expenses. Whether you're donating a percentage of sales or making a flat contribution every month, it's often a powerful way to give back to an organization that you support or one that aligns well with your business. But unlike other forms of expenses paid out of your business bank account, the charitable contribution probably isn't as valuable to your business as you might think. If you're wondering as a business owner, can I donate to charity for my business? Well, the answer is yes, absolutely, but the business won't benefit from the donation in any form, as a business expense or a tax deduction. Whether you decided to pay cash directly from your business bank account to make a $1,000 charitable contribution to your local 501c3, or you collected $10,000 in sales from customers with the promise that you donate 10% of the sales that day to a charity. The $1,000 cash out of your bank and into a charitable organization is not a $1,000 business expense unless you're a C corporation. So that money's out of your bank account. Well, where does it go? Well, unless you're a business taxed as a C corporation, no business may deduct a charitable contribution or donation in any form from their business profit. And that's one luxury that C corporations do have. Instead, owners of pass-through entities, which is anything other than a C corporation, must carry that charitable contribution to their individual income tax return. So here are two ways that you can deduct charitable contributions on your personal individual income tax return. First off, there's the standard deduction. So the IRS lets you reduce your income by a certain amount every year. The standard deduction that people get every year is essentially removing a certain amount of income from the total that you're taxed on. And it depends on the filing status. So for example, in 2021, the standard deduction is $12,550 for single filers and double that, $25,100 for married individuals. So if you file with your spouse, your first $25,100 of earnings in 2021 aren't taxed at all. If you take the standard deduction every year, you can use the charitable contributions that you made during the year to deduct an additional $300 if you're single, or $600 if you're married, for charitable contributions. Any amount contributed over that $300 or $600 is not allowed to be used to reduce your income, and it's gone forever. Bummer. The other option is itemized deductions. So there's an option to take itemized deductions if yours are higher than the standard deduction that you're allowed. The itemized deductions are calculated by adding your state, local, and real estate taxes paid during the year. These are limited to $5,000 for single filers and $10,000 for married filers. So add that to your mortgage interest and your charitable contributions that you made during the year. If those amounts combined are higher than your standard deduction, then you can itemize. And that means that you will benefit from the charitable contributions made during the year through the business. But again, they don't reduce your business profit, which is what you're assessed self-employment tax on.